Numbers, numbers, and more numbers. A new set of economic indicators were released this week, which means it's time to check in on the current status of the Korean economy. For that, joining me live is our regular contributor, Dr. Kim Byoung-joo. Good afternoon to you, Dr. Kim.
Good afternoon.
Now, when we discussed the possible impact, economic impact of the Sewol-ho ferry tragedy, we reviewed quarterly growth. Now, let's revisit that with a longer-term view.
Right, and I'm glad we can do that because usually quarterly numbers are the best indicators to show overall trend. Monthly numbers, they vary a lot, and sometimes it's hard to read what the overall trend is. So in that regard, quarterly numbers are always the better indicators, and this is overall what you see. The red bars, those are the year-to-year comparison. Month-to-month or quarter-to-quarter indicators, they show overall acceleration of this kind of economic growth there. But over and beyond that, the red bars, the year-to-year quarterly change is the way I see it, at least in my own opinion, best indicator overall of economic cycle. So we are on the upturn right now, and as we discussed a few days ago, the big question out there is how long this upturn can last. Indeed, after this last number that we have, which is first quarter this year, the second quarter is a real big question. We have a big question mark for that. And the determining factor for the second quarter would be the trading environment, international trading environment, which seems to be overall improving thanks to the improving conditions in the United States and Europe, and mostly in the developed markets. Even though we have some difficulties in the developing market, including China, that will be one key factor. And the other one would be the overall domestic consumption. And as we discussed a few days ago, the May factor is a very important one. Usually on May, we usually have all these family days and all that kind of stuff, family vacations and long extended holidays. So usually we see in May overall boosting up effect of the economy. But this time, because of Sewol sinking, we are quite afraid whether there will be some kind of lukewarm so-called May effect. So a lot of eyes are closely watching for the second quarter number for now. So we will have to continuously watch this quarter trend.
Right. So how is this growth driven by production and domestic consumption?
The growth that we saw, the quarterly growth of 3.9% that we saw for the first quarter this year, that was driven by strong upward movement in manufacturing. This is monthly data. So because of the January number, you see industrial output. By industrial output, what I mean is manufacturing output. And because of the sharp decline in January, we may be led to believe the first quarter may not be as good. But the thing is, this is a year-to-year comparison. So keeping in mind that January 2013 was a strong month. That's why we had the year-to-year comparison that was showing weakness back in January. So overall, if you add up overall 3-month figures right there, we had a reasonably okay production growth in manufacturing that led to the overall growth there. And in terms of consumption, also we saw a modest increase, at least a 0.3% increase as compared to the previous quarter. And that was what we saw during the first quarter there. And what happened was in March, in the latest monthly number, we had a strong growth in semi-durables as well as non-durable goods, while the durable goods sales were a little bit weak. But overall, what seems to be a little bit confusing visually on the screen right now, what that's indicating is that overall manufacturing as well as domestic consumption, they are on an upward curve here.
So there is a rosy outlook out there, I suppose.
Relatively speaking.
Relatively speaking.
Right.
Now, we heard about, however, in facility investment, there was a quarterly decrease there in the first quarter. What is happening on a monthly scale? Right.
In monthly scale, the thing is, overall, this facility investment itself is a category where for a long time we were seeing disappointing results last year, leading up to last year, and then even beyond that, we were having negative numbers. But now, since last year, later part of the last year, we began to see some positive numbers, as you can see there. And overall, what happened was during the first quarter this year, as you mentioned, we saw a small drop in terms of quarter-to-quarter change in terms of facility investment. But that was because the previous quarter, as you can see on the screen, were a strong quarter. That's why we got to see quarter-to-quarter disappointment a little bit. But overall, the fair assessment, in my own opinion, would be that on the facility investment side also we see some recovery here. And facility investment, as you know, is a very important one for longer term growth. It doesn't affect as much of the immediate upturn, but for a longer term growth, facility investment, the positive performance on that side is critical. And in that sense, I think what we are just seeing on the screen was another positive sign.
Sure. Now, we also know that the Korean economy is very, very export dependent.
Yes.
And we have been getting reports that the export side have been picking up very fast and very well.
Right.
What do the latest numbers show?
Latest number is another one that seems to offer us a lot of positive outlook here. If we can take a look at the April number on the screen here, it shows 9% growth year to year. This is huge growth indeed. And so with that, this last month, April, we had a second largest monthly export number recorded. The largest one ever was October last year, where we had about 50.5 billion a monthly export. Even though in terms of growth percentage, you don't see it here on the screen here, but the absolute amount last October was the largest, and this past month, April, was the second largest by a very small margin. So over 50 billion US dollar export. Korean exports are going once again very, very strong here. And as I mentioned, this is all happening because of the recovery trend in the US market as well as European market. But with that in mind, we have some possible challenges in the emerging markets, including China, where a lot of people seem to believe that the growth seems to be slowing down somewhat. And also Japan is a lingering factor. The Abenomics is not showing as much of an impact here, and a lot of worrying eyes are watching what is exactly happening in Japan. So there are those challenges. But overall, the wrap-up for today's discussion is that overall all the numbers seem to be indicating that we have a positive outlook down the road, unless though the Sewol sinking would have some kind of negative impact that will surprise us.
Right. So unless there is a significant impact, negative impact from this Sewol-ho ferry tragedy, we should be on more or less a right track, on right track to recovery, I suppose.
Right on it, yes.
All right, Dr. Kim Byoung-joo, thank you so much for today and all of this week, and we'll see you after the holidays next week.
Will do.